Okay, guys, good evening to everybody. Today is the 17th of August, 2025, Sunday special, Crazy Market Talk with Kel. All right, today is a Sunday special, so we go straight to the point. There will be two items that I'll be covering today. I'll cover on gold first, then cover on the US market. And both of them, I think it's going to be very lucrative if they actually manifest whatever they're supposed to do on a normal situation. Okay. When I use word normal situation means that there's no intervention, there's no manipulation. We go by nature or what it should happen. I think there'll be some money to make. All right. So with that itself, right, you can share this Zoom with anybody, your family members, your friends, go ahead, yeah, and then come in to listen. It's absolutely free, just that they'll learn more stuff together. Now, of course, before that, disclaimer apply as usual. Do understand this. There will be risk management involvement. Please make sure you do your money management properly so they can enjoy this. Yeah. Okay, so let's talk about gold first. Okay, the very big item on gold this evening, right? Now, this evening I was sharing with Benedict, who's here today. I asked him how's your feel on gold. He is actually saying that, right, he feels there's a big movement coming in, and I totally agree with him. So let me share this with you now. This is the playbook of gold the last 2 years, okay? So you can see on your screen right now that during the December 2020, during the so-called, sorry, my color's not there. Okay, just check it out. During the December 2023 period to about April period itself, about 4 to 5 months, gold was consolidating. Then there was a very strong uptick. All right, so you look at it from here to here, up by $300. So that is more than 10%. Because $300 over 2,100, sorry, that'll be about 11 to 12%. Okay, so that means that after a consolidated 4 to 5 months, there was at least 10% upside. Got the idea now? Okay, let's continue. Then after that, gold again consolidated for approximately, almost like for 5 months again, which makes basically everybody like, oh, what the hell is going on again? Very unsteady, thinking that it's unnerving itself. Maybe gold will crash. Then gold again spike up this time around more than about 10%. Okay. Then after that, this thing happened again, gold consolidated for about 4 months. Then we have one major rally, okay, one big rally all the way by 10%. So you understand my point now? So the thing is this, gold has consolidated for one of the longest period, okay, compared to this period was something similar, about 5 months now. And that's where everybody's like scratching their head. How come gold is not going up? Where were the bull? Remember, why everybody is kind of like worried and asking the question, because when gold was shooting from 3,000 to 3,400 to 500, right? Back then, everybody was screaming for 4,000, 4,002, 5,000, even 8,000. Then after that, gold actually came down, and that basically freaked everybody out. Then fiscal policy itself should bring the gold higher, but again, the market pulls back. So that is the usual thing that you always see, that always display for gold. So that's why gold, if you ask me, is not the easiest market to trade, especially when it's consolidating. But of course, if you do you do sideways, you buy at the high, low, and you sell the high, okay, that was fine. So, every time we sell, right, we have two group of people lose money on a regular basis. Let me explain to you meaning, what does it mean, yeah? You see, when the market is trending, people who short the market will be dead. Then after that, when the market consolidate, there will be people who will sell, buy, and they make money on the sideway. But once the market start to trend again, they will give every dollar back to the market for those who do sideway. And those who do trending like myself, we will make money from there. You understand my point? So again, when it hit the top of the market and the market goes sideways again, those who do trending will be dead because their market goes sideways. You understand? So that's why people say, go, I trend, I die. I sideways, I also die. It's because you're doing the wrong thing in the wrong time. Okay, understand that? So the thing is this, now the market has been consolidating sideways for so long. So now the first thing I want to tell everybody is this: do not do any more overbought, oversold strategy once the market trends. I repeat, do not engage into the overbought, oversold strategy when the market starts to trend. So which means that if the market starts to go higher, right, don't think that, oh, let's short the market right now. I tell you, they will flush you and hit you very, very badly. All right, all clear? If all clear itself, press number 1 right now in the comment box, because this is very important. Now, every time when the market consolidate, that is where I usually will see people getting very aspirated. They get themselves in a very, very touchy feeling. They get very sensitive because they're like, oh, Kel, I don't make money from gold. Why this? Why that? And that is always the point. And then after that, when the gold starts to trend, oh my goodness, that is where they're going to get themselves hit. So please, today I make this session important because you really don't want to be caught by this. Okay. So of course you will say, Kel, how do you know that gold will go up then? Oh, that's a good question. I like that question. How do you know that gold will go up and not go down then? Okay, fair enough. I like that statement. Let me answer you with all the answers tonight. Okay. So this is the gold seasonal pattern since 1980 to today. Not today, 2016. Okay. All right, I cannot see on my screen here. Okay, it's a 40 years seasonal pattern. 40 years. Okay. All right. Like the last 8 years, yeah, but it should be the same thing, yeah. You will notice that usually, interestingly, the August period, there will be a pullback at the start of the year. Hey, interesting. Did August gold come down? Well, let's take a look at gold, then you will know the answer. Let's take a look at gold now. Okay, let me just show it to you. Yeah, just give me a moment. For those that join us, wow, 36 people already today. That's more than the usual people. Yeah, I think a lot of them came from my Vietnam contingent. Yeah. Well, yesterday Vietnam side have a very massive class. They have a group size of 170 people. More than 166 join in. My God, that was really incredible. Okay, guys, do you see this is a very interesting pattern where gold basically went up first and then pull back? Can you see that? Okay, change color. Yeah, it's bad coloring for me. Apology. Okay, go up first, then come back down. Yeah, can you see that? Okay, so now we put this as a superimpose and put in my PowerPoint slide now. Let's take a look. All right, do you see that happening? Can you see that? I cannot zoom thoroughly in, but can you see that the market goes up first and pull back? Hey, interesting, yeah? That's why I say sometimes in life, you need to have some people like me who show you stuff like that. Now, and there's nothing for me to benefit if you lose money in the market. I always benefit only when you make money from the market. I'm an educator. Okay. So guys, watch out for this. If the seasonal pattern is going to come out exactly what we preach here, it will bottom out soon. And then there'll be a massive rally towards the middle of the month. So which actually is something like right now. Okay. So guys, take note of this. Okay. Now, of course, seasonal pattern can also be wrong. But again, with the dollar now at the lower end of the stick, I think there's a very high chance that we're going to see this gold happening. Okay. So that is based on the gold seasonal pattern since 1980s to today. So 40 years of historical pattern. Yeah. So this one you must understand. All right. Okay. Then, of course, the next thing is this. I shared this with you. I told you, right, this is the number that I had. All right, so people ask me, Kel, why you chose these numbers again? Okay, I chose this on a very simple ground. The number of time the high touches the common point. Okay, I use 3454 as a number. Now, some people challenge me and say, why don't you use this number even better and stuff like that? Of course, I can make it nicer for you, but I think we need to find the maximum brim. All right, so I chose the 3454. If you think that it's not the right number, you can use your own permutation, it's fine. Okay, so what I did was very simple. I take the 3454 as a form of resistance. Then I take the low end as the 3151 as the support. Okay, so what I did was I take this as this is like here. Sorry. Hold on. Yeah. Okay, I take this as the guide. So this is like X to me. So this itself is 2X. Okay. All right. So with that range cell, right, I expect gold will hit 3754 by the end of December 2025. So again, if I ask why you do see 2025 and not 2026 then? Okay, guys, I have been telling you this. I tell you that Federal Reserve will cut rates, right? they'll cut at least 2 rates this year, based on what we are seeing right now. But now the speculation is that it could be even three of that. And it'll be like every month, every time the FOMC meeting, they'll cut one. Okay. So the thing is this, but what we saw on last week, the PPI data, it came out so strong, right? So now it may actually cause a problem here, because if the Federal Reserve doesn't want to cut rate as many times as the market foresee, then that means they know that there's something very wrong with the economy. Then it's a matter of time they realize that whatever the bonds they are issuing right now is going to be a problem. So to me, it's a checkmate situation, a checkmate, yeah. So let's just see if gold really were to go up, right? The first resistance will be 3454, and if you can bridge 3454 and stabilize above that, then 3604 will be a very target that I will see by October 2025. Okay, so let's see whether it happens. Yeah. Now, the best thing is about asking Kel, when do you think it will go past 3454? Or that is a question. I don't know. I don't know. Why do I have these dates, right? It's because based on if there's Federal Reserve cut rates, and I think it will cut by then. Because I'm very optimistic to tell you that, although it's kind of pessimistic, is that I believe that the US market is going to go into a big problem very soon. I'll explain to you more in detail shortly. So guys, whether or not it will go there, I leave it for you to decide. But nonetheless, I'm preparing myself that if there's a run-up, I think 3454 is really a very high possibility. Okay, because I believe in my KCB a lot. Yeah, my KCB tells me that it will go there. So 3454 will be my first target. Okay, all clear? Huh? Okay, so that is my numbers for you. If you don't have it right now, take a picture of this. All right, so 3454, 3604, 3754. Okay, so these are the targets that you can consider and do that. I'll take a picture myself, yeah, to remind myself to do this also. Okay, done. All right, so that is the PowerPoint for gold, if I'm not wrong. Yeah, okay. Okay, hold on. That's not the end yet, don't worry. So let's go into something that I want to show you now through the charts. Let's bring it in. Okay, so this is the gold since 2024 with the Williams indicator. Okay, so this one I showed before, right? So I'll show you this again. Okay, so every time when gold comes down to the Williams indicator minus 75 and below, I draw a vertical line like this. And you can see that every time when this happens, there's two things that will happen. Pay attention there. One is that you will see a low closing, which is what you saw. Then you will see the closing itself will be near the low of the market. It means the closing itself near the low, which we saw on last Friday. Okay, right? So it happened again, something similar, but this time now it touches the MA100. So that's why that was a first base. Then it happened again when it hits the bottom, and the closing was near the low. The market was at the MA100, and that was where it bottomed out after a few days. Then the price goes up. Got the idea now? Okay, let's try this again. The market closed down. The Williams indicator hits 95, and then the market rebounded. This time around did not need the MA, and then it went up. So again, the market closed low. Williams hit low. Then the market goes up. Try this again. Market came down near the low. Williams at the low. Market rebounded. Repeat itself, and so forth. Yeah. So you got an idea now. Okay, so the thing is this. When gold recently came down from the high of 3454, came all the way down to somewhere around here, again, everybody was saying that, hey, Kel, you got it wrong. But I repeated the same steps, and then gold went up again. So it's not that Kel is good with gold. No. A lot of people thought that Kel is good in gold because his parts is good with gold. There's a bit of that. But my point is I'm winning this for a very good time. So it's no brainer. I'm a guy who share with you guys everything. So when recently gold came down again, I told you wait for a while, don't buy gold. And once the gold hit the Williams indicator at the bottom and it closed at the low, I was telling you that next day can buy gold, right? And then the gold went up. It's as simple as that. It's not difficult here, guys. I mean, there's a lot of trainers in the market who tell you, okay, my big picture and blah, blah, blah. But I can tell you, no one really tell you exactly which day to buy. So now the thing is this, gold is now at the low, but hey, wait a minute, Kel. The Williams indicator is not at the bottom. Then how? Good question. So when you ask you a good question, I'll give you a good answer. So look at it carefully now one more time. Do you notice that every time when the Williams indicator basically touch beautifully at the 50% point? Can you take a look over here as well? Take a look, that's all. Yeah, can you see on top what happened? Now, it's not 100%, but it's definitely give you some answer to that. So you notice that, what happened? Okay, someone shouted. Let me see. Who was that? If. Okay, so let's go back again. Sorry for the interruption. Okay, so you can see that, right? Whenever the Williams indicator hits a 50% mark on the on a gold hit 50% mark, right? Gold will have a rebound. Gold will have a rebound. But you look carefully itself on the rebound day, there will always be something called a doji. Do you notice that? Not every time, but most of the time. Got it? So tomorrow, very simple. Tomorrow, watch the OP. If the gold stays above OP, buy. If gold stays below OP, don't do anything. If you want to short gold because it's below OP, you can short small, but do not go heavy because you are now near a potential bottoming signal. So you don't be caught at the very wrong part of the market. If you short too heavy tomorrow and the market reverse on you, right, then you have the tendency that, oh yeah, Kel, but the last few days the market goes down, so I just hold a bit lah. Then what happened next? You will be holding a short position near the low and hold it all the way to the sky, and then you will kill yourself for that. All right, so this is something that I always see it repeats on students. So do not do that. All clear? If all clear, press number 2 right now. This is so important, guys. For those in Singapore, Malaysia, Vietnam, please remember that. I really want you to make a lot of money from gold the next few days. Okay, but remember, the OP rule is going to be the most important rule for next few days. Yeah, you don't want to be caught there. So, Kel, if that's the case, you're so confident, can you go heavy on gold tomorrow? No lah. You buy small first when it's above OP. Then after that, as the price goes higher, and then you can consider to do a bit more. Okay. So do not go into heavy artillery tomorrow. Just go slow, build with me together. Yeah. Okay. All clear? Okay. Let me take a picture from it. Okay. All right. Okay. So done. Okay. So now with that, I have completed the goal analysis. Okay. I finished it. Yeah. But then, of course, you want to see the chart, right? Of course, I know you want to see the chart for gold, right? Okay. So everybody look at the chart on gold today. Very interesting. Yeah. Okay. Gold, as you can see, we have the doji. So I would like to inform everybody something very important, very, very important. Tomorrow, confirm no pivot. Tomorrow, confirm no pivot. Got pivot itself, right? That means system got problem already. I'm the creator in the not creator. I'm the messenger of pivot. So basically, tomorrow got no pivot. So no pivot day is the best day, meaning the OP is the key. OP will be the king. So tomorrow, the OP, please don't go in and fire. Wait for a while, let it go. But because tomorrow is Monday, the what do you call the sentiment from the Saudi Middle East side will cross over to Asia tomorrow morning. So that's why you do yourself a favor, wake up at about 6 a.m. Singapore time, but don't trade first. Let the gold move a bit sideways, and then when you see gold really start to go above OP, then you buy small first. Okay. Now, if you trade below OP, then you want to short, can short, but just short small. Okay, all clear, yeah? Tomorrow, confirm no pivot. Someone asked me why. I'm the messenger of it. Okay, Ken. Hey, sometimes ask this question, I don't know what to say. Okay, next question is this. The KSI is green color. Can you see now? Yeah, it's green color as of today. So that's why another reason for me buying gold. The last one will be the very important one. It's a diamond line. Now, the diamond line itself is here. So last week, wow, the market really touched the diamond line exactly and pull back. So unless a new diamond tomorrow, which I don't think so, if not itself, right, then just basically watch out for this diamond line at 3373, right? 3373 is the diamond line, yeah? Let's be very sure. 3373, correct. So if there will be any law of attraction, right, gold will go towards 3373. I repeat, tomorrow or the next few days, gold will likely be going towards 3373 if gold stays up. Okay? All clear, yeah? 3373, yeah? Very, very important. Yeah, let me just take a picture of this again, myself, Sometimes I also forget. All right, so that will be goal for you guys for today. So be very careful on goal, trade according to plan. Okay, done. So that is on goal. So the next 15 minutes, I'll talk about the US market and we can go and rest. Okay, very simple, very direct, yeah? Okay, the US market, let's take a look right now at the US market, the Dow Jones. Now, I already gave this view on Dow Jones a while ago, and I keep on repeating to you like a broken recorder that this, and this. So last Friday, we saw the Dow Jones cross above the line. As you can see, the opening was gap up, right? The market gap up on the Dow Jones, gap up, and then close lower. All right, is it the same thing we saw over here? Yes, the same thing. It's identical. All right, and then the market goes down. But the difference is that one in front, it engulfed the red candlestick. This one didn't engulf yet. So still got a chance of thing happening. Okay, so the time when this happened, the market touched the MA moving average, right? When this happened, the market touched the moving average, right? When this happened, the market did not touch the moving average. So give a guess what will happen to this time. It's either here or this time will be touching the moving average. Okay, so there's two prong on here. Either the market will come back to 44,000, which is somewhere around this area, or it will really go down to the moving average depending as the market glides when the MA is going to go up. So do note one thing is that as the market is moving, the MA will be moving up. Yeah, it's a mathematic formula. It's simple to understand this. When your market is coming down, the MA will be going up. You see that? So when the market is coming down, you can see the moving average going up. That is a max moving average. Okay, it doesn't go the other way. Only when the market in a cascading a cascading bear, then you will have the moving average moving away from the market and the market to chase after the moving average. So when the market is about to peak, right? When the market is about to peak, market is going to peak, right? Then your moving average itself will be following until you always see the typical switch over whereby the thing crossover, then you have your so-called significant dead cross, yeah, and that's where things happen, yeah. So you get the idea now? Yeah. So you must understand how to use moving average properly. Yeah. Okay. So of course you say, Kel, but you've been calling for sell for the longest of time, right? And the market have been going up and down, but majority sideways upwards, right? Yes, it's the same thing what I told you. Since July onwards, we have been trying to call for the big sell, but the market had to keep on pushing and pushing and pushing and pushing. And that basically makes a lot of people think that, hey, it's fine, it's safe to buy and trade, Now, the thing is this, tomorrow there's an MAO video, I'll come out. There are three big financial entity calling for sell, and it's not just regular, what they call fund managers and stuff. These are all the very, very big sized traders, and they're all calling for the same thing, SELL, okay, sell in the market. So of course, I know that there are some people who are calling for buy. I don't disagree with them, but I say again, I don't want to be caught at holding the baby. I'm still bullish for this year. I believe that this comes down, it'll be like this, or this will happen. It comes down, and this will happen. So it's either one of them. It's either one of them, the red one or the blue one. So let's down today got 39 people. Wow, that's a big class for today. Now, there are 39 of you guys. Can I ask you this? How many of you think it'll be the red one? The red one. How many think it's a blue one? Can you key your color now? Who say red? Who say blue? Please key in the comment box right now. I want to key. Who say red? Who say blue? Please key now. Okay, we have blue, 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 red. How about the rest? I don't see the rest. Come on, let's participate lah, yeah? Come on, let's do it. Show me what you think. How many of you say blue? How many of you say red? Tomorrow I'll give the answers by do the tabulation. Okay, we have now more red coming in. Number 2 is what? Richard, blue or red? Number 2. Okay. Red and blue. Okay, we see some blue coming in again. How about the rest? Or the rest, no matter how one say the color. Okay, if you ask me, I honestly feel that blue will likely be happening. My personal feel that blue will happen. Yeah, I think blue is what Susan said. Blue is better because blue, if it comes down, then that's where the support will be, and then the market shoot up, right? Then I think that's a best story. Everybody makes money, right? Okay. So I want to tell to those still around here, for those two, Bitcoin and Ethereum, if blue actually happens, two things will happen first. Gold will also come down. Bitcoin, Ethereum will also come down. So please take note of this. I'll repeat myself one more time. If blue really happen, at a certain part of the time when it's coming down, gold will come down. This Bitcoin and Ethereum will come down. So please remember this. It's a pattern. All right. So if that happen, do take your profit and get out. And then when the market really bottom out, then you just have to buy everything already. Bitcoin buy, Ethereum buy, gold buy, Dow Jones buy, just buy, 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 buy. Okay? Can? So this one, we remind ourselves one another. Okay? If this actually happen, we will do that together. Okay? So this one, I also take a picture. Just in case I forget. Yeah, very important. Yeah, the blue and the red. Yeah. So blue pill or red pill? Metrics. Okay. All right, so now what's a fundamental reason why I think that the blue will happen? So I got 1, 2, 3, 4, 5. The number 5 one, the number 5 chart is going to basically very scary. Okay, so this one I'll leave to you at the back. So let's do the first one here, the great turn. Okay, so let's take a look. This is S&P 500 price to book value ratio, okay, since 1946 until 2025, okay? This is from Bank of America Global Research, okay? And it's actually sourced from Bloomberg. So all these are great source that really is available in the market, but not many people talk about it, okay? So you can see that this is S&P 500 price to book value, means you take S&P 500 divided by the book value of the companies. Now, this is where the usual 2 is around. That is a standard deviation. So on the average itself, right, when the market go to minus 1.5 standard deviation, is something like a KTR, yeah? You will always see the market will bottom near 1 and the market recover. Go to near 1, market recover, right? So it's a very good time to buy. So in 1949 and 1982 was a very good time to buy stocks. If you buy stocks at the time, I tell you this, just for the next 10 years, you don't need to do anything and you can make a lot of money from the market. Idea? Okay, so now the thing is this, then on the flip side, when the market go above minus 1.5 standard deviation, plus 1.5 standard deviation, you will actually have an overbought, right? But you notice when the market go overboard, it go crazy. It go more than that. So now everybody do me a favor, okay? You see this. This is, let's say this is 0 and this plus 1.5, right? So you take a finger now, your thumb and your index finger, you put on your screen, then you shift it up, or mathematically just do that. So you will see what here. So you have plus 1.5, 5 is here. So take a screen and you draw a thing across at 5. Here we go. Can you see now? So from there itself, right, in March 2021, that was whereby the market was crazy, and that was basically 2000 itself, sorry, my bad. In year March 2000, that was where the highest, it went at 5.1, and that was where the NASDAQ crashed down back then. Okay, the NASDAQ crashed from 5,000 plus, I think, went all the way to 800. Okay, where are we now? Oh gosh, we are 5.3 today. After 25 years, we are now at 5.3. So think about this, all right, guys. The thing is this, really, do you want to buy here? Now, of course, like companies like United, right, which usually a lot of people buying, including this Michael Burry. Now, those price has came down by 40%. Okay, that's cheap to buy, no problem. I even call for buy also myself. So things that those are really came down a lot, you can try. But the problem is this, if the market do cascade downwards, then these type of companies who are fundamentally vulnerable, right, they may get hit, So do you notice that although Warren Buffett bought some of it, I think 5 million shares, but he didn't buy a lot, no. It's in billions of dollars, but it's not the type of size that he usually buy. So I think he believed that this can get cheaper. So this one tomorrow I'll cover on UTD. Yeah. All right. So this one, be careful on that. So in this case of mine, I still think that we have to look at this. The price to book value is too expensive. So I think you shouldn't be buying right now. At least don't go heavy lah. Okay. Again, this is up to you. If you want to buy, I can't stop you. This is your right. Okay. All clear. Wow, today are 41 people. My biggest class for a night Sunday event. Okay. Cool. All right, so that is the first one. The second one, which is this. This is the 2024 to 2025 overvaluation across the board, combining with PE ratio, forward PE, CAPE, PB, okay, EV over EBITDA, and then Q ratio, market cap to GDP. Oh gosh, it's basically every connotation of economic. You just put it together. Then you tell me. It happened before in 1929, and we all know what happened then, right? We have the catastrophic depression. In 1966 itself, we also saw that we have a severe recession. So give a guess the next time it happened in 1999, where you saw the book to ratio was 5.1. So give a wild guess. Today, 5.3. Where are we? Above? We are here, lor. So do you want to fight against reality, or you want to fight with history, or you still think that this is going to be different? Now, this is never shown in anywhere, right? But guys, this is based on elliotwave.com. Hey, this is actually on Bloomberg. So guys, do you think now this particular chart, okay, you can see over here, was available since January 2025. Today, we are in August period. So I don't know how high is this number right now. Give a guess. So again, I'm informing you yourself, there's a lot of things happening in the world. You just had to be very, very, very careful. Okay? You just need to be very, very careful because you do not want to get yourself in the wrong problem. Yeah. Of course, this is basically, you must see this. Okay. So guys, you must understand, you say, but Kel, maybe it's so wrong already. And then all this thing itself. Okay. So I leave it to you to decide. Yeah. I'm not going to argue with the things. These are all numbers and figures for you to decide. Okay. Now, third one, this is S&P 500 adjusted for US corporate profit. Okay, so where are we right now? You can see again, we are now at the second standard deviation. The last time we see this was back in 1960s. Then after that, we go crazy in year 1999. So where are we right now? We are now here. Okay, so we are again at the point. So of course, some of you say maybe we could see this explosive movement first before we get to see the big sell-off. Okay, fair enough. But the book ratio is still at 5.3 times. Then I don't think we should go anywhere further. And back then itself, right, the Dow Jones back then was 21,000 high. Today is 45,000 high. It's double. Okay. So again, I repeat, I'm not here to tell you the market will crash. I believe that there will be profit taking to come. And end of the day, if you think it's a bull, still stay buy. Now, for me, it's very simple. I still buy when the market is above 4p, but I just buy relatively small. But when the market comes down, I will go for the sell. So all clear? If all clear, right, press the next number. You know what's the next number? Next number is 3, yeah? Number 3, yeah? Next number. Okay, we do this to make sure that everybody get itself and moving. No, this is not Vodka. All right, maybe when the Dow hit 42,500, I'll drink a vodka then. Okay, all right. Now, some people will say that maybe the chart looks like this, as you can see on the screen here, like this guy. He feels that this chart can be placed this way, can be much higher like this one, like converging upwards. It's all possible. Now, everybody, same chart, see it differently. So there's no right or wrong. Yeah, some people will tell you that maybe this could go through the roof and hit a new all-time high. I mean, all is possible. Yeah. Nothing wrong. It's just that how you visualize the chart. But I put in everything together and let you decide. For me itself, I rather go small and slow on the buy side. Okay, never mind. Next one now. Okay, this is where I told you I'm very, very, very worried. And I believe that Jerome Powell got this thing on his hand. This is the Bloomberg calculation of the Bureau Labor Statistic data. The 3 months average of the U6 rate of age of 16 to 24, it shows that now the labor all right, the unemployment rate for young adults is up sharply. So you can see that happen. We've seen it before back in 2007 and 8. We see it before back in 1990 to 2002. We see it before in year 2020 due to the COVID crisis. So every time when you see this mopping up at a very fast speed, it's a very clear, because the thing is this, as a company, would you want to employ younger or older people? So by right itself, you should employ the younger people. Right? Nothing against the older people, but that is a normality. So if these people are not being employed, that means the job market itself is actually rapidly deteriorating. This is something that you must see from that. And this is from Bloomberg Economics. It's not fabricated numbers, okay? So there is another reason why itself, the unemployment data itself was so bad back then, and Donald Trump had to sack that guy away. You understand? So again and again, all these are hard and figures numbers, so you cannot lie. And if you look at it itself, right, if you build up this back then, this is year 2010. So 2 years before that was 2007, and that was exactly the period whereby you have Lehman crisis coming in, building up along that point itself. Okay, so again, I repeat, the last time, I know I'm hearing like a broken recorder, please be careful on the long side. And the last one before we get our rest in for today, now it's 10:40, right? Singapore time, the last one. And this is the one that probably going to make you very uncomfortable for this evening. But again, it's very difficult to fight someone if they want to manipulate the world data. But when you see this chart, you will know that, right? So guys, take a look. Take a look. I give you about a minute to take a look and understand this. A lot of writings everywhere. This is the leading economic index, which is the LED, LEI, sorry, versus the S&P 500, the market crash indicator. So 1980s is this figure. LED is a very important information because it basically put in all the information inside there, the leading economic index, yeah? And you can see that it has been dropping, all right, really dropping for the last 3.5 years, while the S&P 500 just simply don't care, don't bother, and go for new high to new high. Fair enough. So there is periods of divergence, but every time you can see what happened after that. So I'll show it to you. Okay, so basically there were period whereby in 1989, where the LED goes down, the S&P goes up. Then after that, after a while later, the S&P crashed by 19.9%. Okay, so again, there are periods whereby the LED goes down, the S&P goes up, the market crashed by 49.1%. Got my point now? So the the LEI itself, right, is a leading indicator, but there will be a period whereby the LEI will be going down while the S&P continue. Now, why is that happening? Because if you remember, during those period of time is where the interest rates were climbing. Interesting, were climbing while the market tells you, don't worry, all is good, and it keep on pushing and pushing and pushing. So until the LEI really start to crack down, that is where the market kind of realizes, oh dear, we're in the wrong side of the market. Then the catastrophic market collapse comes in. So it happened again in recent time where the LEI was coming down, the S&P continued to go up, no one worry, and the market dropped by 33.9%. So guys, is the LEI really up or down? The answer is very clear. It's very far, far down. But wait a minute, the stock market is going up. Exactly my point. So now this is where you must understand the problem, okay? So the second part of this is, do you notice this? There will be a point whereby the LEI and the S&P 500 will meet together after the sell-off. Do you see that? It meets together. Okay, this one almost met, but missed by a little bit. This one confirmed meet. This one also met in the way. So if the S&P is to really meet, oh my God, we're talking about really very serious number here itself. So which means that if that really happened, we are going to look at the S&P going down to where we have back then in the year 2020. Now, I don't think that will happen because you know how bad would that be now? Let me give you an answer right now, yeah? If this really, really happened, okay, let's go crazy a little bit, yeah? Okay, let's say if the market really go crazy enough? Boy, go back to year 2020. Wow, this is where the market had to be, lor. I think that would be a nut. It will be a nut case to see the SM Dow Jones falling to here as well. I don't think it will happen. That will really kill Donald Trump away from the presidency. I don't think that will happen. So you ask me where, right? I think the most easy way to give you the answer, I think the easiest way, hold on, okay, is to this. Okay, everybody, let's take note of this right now. Okay, last week, last Friday, yeah. Last Friday, the Dow Jones has created a new all-time high, right? Okay. All right. So it's very simple now. Everybody take a piece of paper or you can write it down somewhere, take a picture. This number is recreated on last week, and this number is 45281. Okay, the high here. So a 5% drop will be 43017. Okay. Now, of course, some people say, Kel, the last time you also have a historical high here. The market is supposed to drop by 5%, which is here, but it dropped only like about nearly 4% and rebounded. Hey, guy, but the high drop 4%, not enough. Sometimes, because I say 5%, everybody just stick to the number of 5%. Then just because of 5%, then you want to get upset at me. Hey, 4% is good, my friend. If I get 4%, it's a good number, right? So if you scared, maybe every 1%, every 1%, you take some profit, can. Okay? All right, so do your mathematics, guys. It's not difficult. Just do 45,281 multiplied by 99, 98, 97, 96, 94. Let's do that down, and you will get your 1% number. Okay, it's not difficult. So I hope you will make some money. So there are a few things to watch out for. Is number one, there must be an engulfing of the white candle. So we do have that in a way last Friday, but the market did not fully engulf the white candle. So I have a bit of reservation. But once the market goes down and bang downwards, then of course this guy will be the first one already, right? So everybody do me a favor. Can you calculate for me this? Okay, 45,281 multiplied by 0.99. What number is that? Try again. 45,281 multiplied by 0.98. What number is that? Do me a favor right now. Well, I see Joe very fast, Joe. Joe already come on number. Okay. Okay, Joe, the first number is 44,828. Put it there. Okay, next number. 44,375. Thank you, Jonathan, Joe, Susan, Joe Fu, and Jonathan. Yeah, 44,375. Okay, so that means that between 1%, from 1% down to 2% down, that means minimally it will cover the white candle over here. So this white candle is a KCB, right? So this KCB itself is 44,452. I repeat, 44,452. Okay, so which means that if the market actually do come down by 2% from the highest point down, it will have to break below the KCB at 44,452. So I strongly believe that this will happen. So last Friday, the closing is 44,928, right? So based on this number to this number over here, we have about 500 points of profit. So the thing is this, if anybody can really maximize and make 500 points profit for this Dow Jones trade, no matter how big or how small you trade, you can capture 500 points down and take profit at 44,452. I will give you 10 bonus credit. I repeat, if anybody can hold a position until you see 44,452, and this position itself, right, you hold it for about 400 to 500 points profit. You just hold it. It can be the smallest of 0.01, doesn't matter. You just hold it down for 400 to 500 points, because from where we are at 928 to 4452 is about 400 to 500 points, right? You hold it all the way down to 44452, okay? You can do that. Even for the smallest contract of 0.01, I'll reward you with 10 bonus credit. Okay, all clear? 10 bonus credit, yeah? Now, of course, you lose money, don't blame me lah. But if you want to do a try here and you believe what I say, right, you can hold it for 400 to 500 points and take profit at 44452. You get your 10 bonus credit. All clear? If all clear, press the next number, which is number 4, right? MSU. Okay, can? So this is a little thing that for you. Okay, if you can hold it all the way down, good. So same thing for gold. If you can hold gold, you buy gold, it's above OP, you buy some gold, and you hold it all the way to 3373. I repeat, 3373, yeah? All right, now I'm gonna draw it for you, yeah? Give me a minute, yeah? If you can hold gold and you buy gold, whatever quantity you want to do, but remember, I'm not going to pay for your losses, yeah? But if you do hold gold all the way to 3373, which is somewhere around here. Okay. All right. If you can buy a gold above opening price, must be for sure. And you hold all the way to 3373, which is the diamond line. Okay. I will also give you 10 bonus credit. Okay. 10 bonus credit. Now this one, you must hold it all the way. Yeah. Hold it all the way. Okay. And you must hold it. So the goal is 3336, right? So the thing is here to here is about almost $35 to $40. So if you can hold gold all the way, even the smallest contract 0.01, you hold it all the way to 3373, then take profit, you get yourself 10 bonus credit. All clear? If all clear, press number 5, and that will be end of today's session. Yeah. Now, for those in Vietnam as well, you want to try this also can, right? You just have to do what I just said, either for the Dow Jones or the gold. And after that, you just show me your statement that you make money. But again, I repeat, if you lose money, I cannot be liable, yeah, because this is just only to show you that how it should be working. If the numbers go according to plan. But of course, again, if you think that the market goes below entry price, you want to cut first and you buy again, no problem. Like I say, do your risk management accordingly, right? I've said this many times in the group chat, yeah? All right, guys, that will be all for this evening. I don't want to take too much of your time. It's a Sunday. I know you need your rest. I hope today you enjoyed your session very much. So do me a little favor. If you enjoy the session, right, give me upon 5-star, give me how many stars, and that will end the session for today. I hope you make money. I hope that Ben, you and me will make money from the market too. I hope everyone here from Singapore, Malaysia to Vietnam all makes money. And I wish you all the best for trading. And do me a favor, Richard, if you are doing a summary for today, don't do first, okay? Because there is people who participating for this little challenge. So those who are online, then is actually applicable to them. So the revision thing itself, don't share the summary first. Richard, do me a favor, can do it after when we post out the video, then you do a summary so that you won't be confused, yeah? Oh, okay. Oh, if you know this, never mind, can do translation. Can just do a ChatGPT translation. Because my friends in Vietnam is watching this right now. Okay, guys, thank you very much. Take care and have a good night rest. Bye-bye.